Okay, please start, sir.
Okay. Good evening. Any doubt, any question, any query from our previous session? Okay. I believe there is no doubt, no question, no query from our earlier session. So now we are going with income from house property. Okay. Income from house property. The second head of income out of the five head of income, we already discussed there are five heads of income. Number one, salaries. We discussed last night. Then income from house property. Then PGBP, capital gains, and income from house property. This is the head to a rental. The regular income, revenue income from house property shall be charged to tax. If these three conditions are satisfied, then the annual value of the property shall be taxable under the head income from house property. What are the three conditions? If these three conditions are satisfied, then only income would be considered, annual value would be considered as an income, and that would be taxable under the head income from house property. House property, there should be house property. If there is no house property, then income should not be taxable under the head income from house property. It is not like income from any immobile property. It shall be taxable under this head. No, there should be an house property. What do you mean by house property? A property consisting of any building or land appertinent thereto. If there is a vacant land and you are earning income by giving that land on rent to someone for solemnize any ceremony, etc., then that rental income shall not be taxable under the head income from house property. At least there should be a house property. However, if this land, suppose I have this bungalow and it is the lawn, courtyard, backyard, and this is lawn, this is servant quarter, garage, etc. Then the entire property is considered as a house property because house property includes building or land appertinent thereto as a house property. However, if it is a pure vacant land, then it should not be considered as a house property. First element, there should be a house property. Number two, assessee should be the owner of that house property. If you are not the owner of that house property or deemed owner of that house property, then the income from house property shall not be taxable under the head income from house property. For example, for example, if I have if this is a house property belongs to Mr. A, Mr. A let out this property to say Mr. B, and again Mr. B let out this property to Mr. C. The rental income earned by Mr. B, Mr. C is paying rupees 12,000 as a rent to Mr. B, and Mr. A is getting rupees 10,000 as a rent from Mr. B. In this case, the rental income earned by Mr. A shall be taxable under the head income from house property because Mr. A, there is a house property and Mr. A is the owner of that house property. This rental income shall be taxable under the head income from house property. On the contrary, the rental income earned by Mr. B shall not be taxable under the head income from house property. The reason is that the house property is there, but Mr. B is not the owner of that property. Hence, whatever with the income is generated, income is earned by Mr. B shall not be taxable under the head income from house property. It shall be taxable under other head of income. Done? Clear? That means, can I say that income from subletting is not taxable under the head income from house property? It may be taxable some other head. It may be taxable under the PGBP, or sometimes it is taxable under the head income from other sources. But surely it would not be taxable under the head income from house property. Number third, that house property should not be used in business or profession carried on by the owner himself. That means if Mr. A have a house property and this house property is used by Mr. A in his own business or profession, in his own taxable business or profession, then income should not be taxable under the head income from house property. However, it is given on rent to someone else, and that tenant is running on the business. Tenant is running a business on that property. Rental income shall be taxable under the head income from house property. If Mr. A owned a house property and that house property is kept for their self occupation for their own residence, then again it would be taxable under the head income from house property. There are three criteria. If these three criteria are satisfied, then annual value of the property shall be taxable under the head income from house property. What are the three criteria? There should be house property. Assessee is the owner or deemed owner of that house property, and that house property is not used in the business or profession carried on by the owner himself. Then then whatever be the annual value of that house property, if these three conditions are fulfilled simultaneously, then annual value of that property shall be taxable under the head income from house property. Be careful here. The word is used. What is subject matter? What is subject to charge? It is annual value. It is not income. What do you mean by annual value? Annual value, in common parlance, annual value means income earning capacity of the house property. Whether you are earning that earning is real income or not. If your house property has the earning capacity, that is known as annual value. If these three conditions are fulfilled, then annual value, that means earning capacity of the house property, would be taxable under the head income from house property, subject to certain exceptions. Is it clear? Any question, any query till now? Anyone? Anyone have any question, any query? Okay. We already discussed income from vacant plot of land. Plot or land is not taxable under the head income from a house property, but it may be taxable under the head income from other sources. The reason is that since there is no house property is involved, hence the income should not be covered under this head of income. Further, we already discussed annual value refers to the earning capacity of the house property. It may be your actual earning, it may not be your actual earning, but the earning capacity of that house property would be subject to tax under the head income from house property if these three criteria are fulfilled. How to compute income from house property? It's a very simple format. You are supposed to remember this format. Just insert the figure in this format. You will get the result. First of all, we required gross annual value. Gross annual value of the house property. What is the gross annual value? That means what is the earning capacity of that house property? Less municipal tax if it is paid by the owner during the previous year. That means on cash basis, if it is paid by the owner, then we should reduce that amount. It may happen that the municipal tax has been paid by the tenant, no deduction is available. Municipal tax, if it is paid by the owner, whatever with the amount of the municipal tax paid by the owner related to that house property is available as a deduction. It may happen that you have paid municipal tax for last 5 years during the previous year. Entire amount of municipal tax paid by you during the previous year is available as deduction, irrespective of the fact whether the tax is relevant or related to this particular previous year or any earlier previous year. It hardly matters. That means on cash basis, deduction is available. After reduction of municipal tax, we got net annual value. From this net annual value, two deductions are available. Number one, called standard deduction. Number one is called standard deduction. Nothing to do with this. Only whatever figure you got as a net annual value, just 30% of it. If this figure is positive, then make 30% of it. This is known as standard deduction. If my gross annual value is say 1,10,000, and during the year owner paid 10,000 as a municipal tax to the corporation. So net annual value is 1 lakh. On this 1 lakh, if it is positive, then just treat 30% of it. That is 30,000 is treated as standard deduction under section 24A. Just 30% of net annual value. If the net annual value is positive. And then one more deduction is available if the house property has been acquired through the borrowed capital, then whatever be the amount of interest you are required to pay during the previous year, that amount is available as deduction. That means interest on borrowed capital. The deduction in respect of interest on borrowed capital is available on accrual basis. Even though it is not paid during the year, still you will get the deduction. That means municipal tax is available on cash payment basis. On the other hand, interest on borrowed capital in general available on accrual basis. After reducing these two deduction, whatever be the figure we got, this is called your income from house property. That income would be taxable under the head income from house property. Be careful. If you are selling your house property, that means if you are transferring your house property, any gain arise would not be taxable under the head income from house property. That gain would be taxable under the head capital gains. Done? Clear? Now question arises how to calculate this gross annual value. What is the meaning of this gross annual value? That means earning capacity of the house property. As per in general, there are four factors which determine the earning capacity of the house property. We are using this four factor to determine earning capacity of the house property. What is the annual value? That is the earning capacity of the house property, not real income. It is earning capacity of the house property. Number one, there are four factors. Number one, fair rent. Number two, municipal value. Number three, standard rent by Rent Control Act. And last one is your actual rent. If you have a house property, you let out this house property to one of your friend for a monthly rent of rupees 10,000. However, if someone else asks for this property, you may charge 12,000 per month. Can I say that due to the relationship with your friends, you reduce the rent amount of the rent from 12,000 to 10,000. But the earning capacity of the house property is 12,000. You are getting rent of 10,000, that's fine. But the earning capacity of that house property is 12,000. That means in this case, this 12,000 per month should be considered as your gross annual value. We should compare this four factor in some logical way. That the concept is that first of all, we should determine fair rent. That means this property, the nearby property, how much rent they fetch. Generally, more or less, we also expect the same amount of rent. If suppose this property, which is nearby my property, more or less similar in the same locality, if this property has been let out for rupees, say 15,000 per month, and say someone asked me to get this property to let out this property, he asked me how much rent I require. How much I say? How much can I ask for? How much rent I ask? Can I say I need 50,000 per month? Can I say 5,000 per month? I will more or less, I will ask more 15,000 plus minus certain amount. But more or less, my mindset, my expectations would be more or less around 15,000. Agree or disagree? This is known as fair rent. That means this factor determine the rent earning capacity of the house property. So we should compare the fair rent with the municipal value. What is the municipal value? The value on which municipality charge tax, or municipality calculates tax. That municipal value or fair rent is required to be compared. whichever is higher is considered as the should be considered, and that higher amount should be compared with standard rent. If the my expectations is say 20,000, but if there as per any law, as per Rent Control Act, if Rent Control Act is applicable on my property, and as per that law, as per that act, if government has decided, if corporation has decided, maximum amount of rent can be charged up to rupees 15,000 per month. Can I say that in that situation, even though nearby property was let out at 20,000, but my expectations is also 15 is 20,000, but if this act suggests that no rent should exceed 15,000, then can I expect I can get more than 15,000? Obviously, no. My expectations would be reduced due to this standard rent. If there is no standard rent, then surely my expectations would be 20,000. If there is Rent Control Act, then I will compare this higher amount with standard rent and consider whichever is lower as my expectations. If this is 25,000, then my expectation would be 20,000 only, because even though Rent Control Act suggests 25,000 should be the rent, but um, fair rent of this property or municipal value of this property does not exceed 20,000. In that situation, my expectation should be on lower side. Can I say that? Can I say that first of all, I require to calculate my expected rent from that property? For this one, we need three factors called gross municipal value, fair rent. First of all, we will compare gross municipal value with fair rent and consider the higher of this. And then we will compare this higher amount with standard rent and consider whichever is the lower. That amount is considered as reasonable expected rent. That is my reasonable expectations from that house property. Now I will compare my expectations with reality. That means actual rent, whatever amount I received as reduced by any unrealized rent. That should be compared, and we should consider whichever is higher as my gross annual value. That should be considered as earning capacity of the household. Even though my expectations was only 25,000, but someone gave me a rent of rupees 35,000. Can I say him, no, since my expectation was only 25,000, so I cannot give you that property on rent for rupees 35,000 per month? No, it is not commercial nature. We should let out this for 35,000. In that situation, my gross annual value, that means the earning capacity of the house property, should be considered as 35,000. If it is given on only for say 15,000, in that case, earning capacity should be considered as 25,000, subject to certain exception. Done? Clear? Any question till now? How to compute gross annual value? There are four factors. We should consider these four factors to determine gross and annual value. First, we should consider gross municipal value, compare with fair and consider whichever is higher. Then we shall compare that higher value with standard rent and consider the whichever is lower. That amount is known as reasonable expected rent. Then we will compare that reasonable expected rent with actual rent as reduced by unrealized rent. Whichever is higher in general shall be considered as earning capacity of the house property, and that is known as gross annual value. After determining gross annual value, we shall put those figure into this table to determine my income from house property. Is it clear to all? Anyone have any question, any doubt, any query? Please raise. Till now, anyone have any question, any doubt, any query? Okay, great. Now, however, if sometime what happened, suppose my reasonable expected rent is 100 and actual rent I'm getting 120. What should be my gross annual value? Anyone? What should be my gross annual value? What should be my gross annual value? Kavita, Priya, 120. Why 120? We should consider the amount whichever is higher. Okay, fine. In this case, gross annual value should be considered as 120. Now, again, think another illustration. Suppose reasonable expected rent of this house property is 120 and actual rent, that means what I got, is only say 100. But why I got this 100? Due to vacancy. The house property remain vacant for 4 months. The house property remains vacant for 4 months. In that situation, the only exception here is that in general, we should consider gross annual value at 120. However, in this situation, what we will do, why we should analyze why my actual rent is lower than reasonable expected rent. We will analyze why my actual rent is lower than reasonable expected rent. If there was no vacancy, can I say that my actual rent exceed reasonable expected rent? If there was no vacancy, that means this 100 is equivalent to 8 month rent. Agree or disagree? If the house property was let out for entire year, then the actual rent would be 1,50,000. Yes or no? If this house property had this house property let out for entire 12 months, then my actual rent should be at 150. Yes or no? If your reasonable expected rent is higher than your actual rent, just due to vacancy, or in other words, if your actual rent is lower than reasonable expected rent due to vacancy, only vacancy, then the lower should be considered as my gross annual value. Here in this case, my actual rent is lower than reasonable expected rent due to vacancy. Hence, we should consider 100 as gross annual value. Is it clear? Is it clear? Is it clear? This is the only exception to this rule. In general, reasonable expected rent or actual rent, whichever is higher, should be considered as gross annual value. However, one exception, if actual rent is lower than reasonable expected rent due to vacancy, then we should consider lower amount. Okay. One illustration. If my municipal value is 100, fair rent of the property is 120, standard rent of the property 110, actual rent is 50. House property was remain vacant for 6 months. What should be my gross annual value? Please suggest. Please suggest. Kavita, what should be my gross annual value in this case? Mohana, Priya, you should also answer. Siddhartha, you should also answer. Tejashwini is expected to provide the answer. 110. Why 110? We got one answer. Why not answer from other? Kavita, what happened? Is there any doubt? Siddhartha, do you have any doubt? Priya? Okay, one answer. He's typing. Okay. First of all, in this situation, we are required to calculate our reasonable expected rent. How should I calculate my reasonable expected rent? For this, for the purpose of calculating reasonable expected rent, I need gross municipal value and fair rent. We should compare these two factors and we should take whichever is higher, that is 120. Now we will compare this 120 with 110 and we should consider that is standard rent. We should consider whichever is lower, that is 110. Now we should compare this with actual rent, 110 or 50. In general, we should consider 110. But we should check why if actual rent is lower than my reasonable expected rent, then we should analyze why this rent is lower. Can I say that if there was no vacancy, there was vacancy for 6 months, if there was no vacancy, my actual rent would be of 100, yes or no? 50 is for 6 months, then for entire year, it would be 100. Agree or disagree? That means that means if the house property was let out for the full year, then instead of 50, my actual rent would be 100. Still, my actual rent is on lower side in comparison to reasonable expected rent. Can I say that there are some more factors are involved? Due to those factors, it may be anything else. We are not supposed to guess what was the factor. We are not supposed to analyze. That means my actual rent is lower than reasonable expected rent, not just due to vacancy. If the answer is yes, in that situation, higher should be considered. In that situation, higher should be considered as my gross annual value. Hence, my gross annual value in this situation is 110 only. Correct? Is it done? Tejashwini, clear? Mohana was typing earlier, but now he's not typing anything. Okay. Any doubt? Okay. One more example. Parent 300. Standard rent, municipal value 350. Standard rent 360. Actual rent 200. House property was vacant for 7 months. Now compare. Now what should be my gross annual value? Anyone? What should be my gross annual value of this house property? Can I say that first of all, we are required to compare municipal value with fair rent, whichever is higher, we should consider that is 350. Then we will compare with standard rent and we will consider whichever is lower as my reasonable expected rent. Now I will compare my reasonable expected rent with reality, which is only 200. So in general, 350 should be considered as my gross annual value. However, we should check why my actual rent is lower than reasonable expected rent. Is it due to vacancy or something else or also involved? Some other factors are also involved. If my property was let out for throughout the year, since it was vacant for 7 months, if this property was let out throughout the year, then my rent would be at 480. 200 divided by 5 into 12. It should be at 480. That means my actual rent is lower than reasonable expected rent due to vacancy. Agree or disagree? In this situation, the lower, that is 200, should be considered as my gross annual value. Done? Clear? Done? Tejaswini ji, no, 480, no. It is 200. 200. It is 200. 200 should be considered as my gross annual value. Then we got 200 as my gross annual value. We would put this figure here and we should reduce whatever with the municipal tax paid by me during the previous year. Suppose I have paid 20 as a municipal tax during this previous year, we should reduce. That means the deduction in respect of municipal tax is available only if that tax is paid by owner during the previous year. That means on cash basis. We got 180 as my net annual value. Net annual value, we will get two deductions. One is known as standard deduction, which is 30% of our positive net annual value. That means 54 is available as a standard deduction, then interest on borrowed capital on accrual basis. Presuming this house property was acquired by me taking a home loan. During the previous year, I paid interest, bank charge rupees, say 100 as an interest on this house property. Whether it was paid by me during the year or not paid by me during the year, I will reduce 100 as a interest on borrowed capital. So altogether, the total deduction is 154. My income from house property is 180 minus 154. That means 26. Done? Clear? Clear to all? Is it clear to all? Very simple in comparison to salary, etc. Now, this is the solution we are supposed to provide if the house property is let out. If the house property is let out throughout the year or for part of the year. If the house property was not let out during any part of the year, that means the house property was kept for your self occupation. That means the house property you reserve for your own residence. In that situation, how to compute our income for two self-occupied property? For two self-occupied property. The self-occupied property means the property which is reserved, which are reserved for your self-occupation, for your residence, and you did not derive any benefit from that house property. Suppose I have three house property. This one was let out. How to compute income from this house property, we already discussed. These two house property, one is located in Kolkata and another one is located at Chennai. I kept this house property for my self-occupation. That means this house property are reserved for my residence and I did not derive any benefit throughout the year from this property. It may happen for the entire year I did not visit to Kolkata and entire year the house property remains like locked during the entire year. It hardly matter. But since this house property was kept by me for my own residence and I did not get any benefit throughout the year from this house property, these are known as self-occupied property. Any of two self-occupied property, the net annual value would be considered at zero. For any of the two self-occupied property, the net annual value would be considered as zero. That means in our solution, for self-occupied property, we should not supposed to consider this one. We should not consider this one. Our net annual value, we will start from here. Only the net annual value shall be considered at zero. For any two self-occupied property at your choice, if you have many house property for your self-residence, self-occupation, then out of this bunch, only for two house property, we should consider net annual value zero. Since it is zero, 30% of it, again, it would be zero. Sure. Then one deduction is available, that is interest on borrowed capital, that is available on accrual basis. And in case the house property is a self-occupied, then there is certain cap on it, on deduction of interest on borrowed capital. The cap is 2 lakh rupees. The cap is 2 lakh. Be careful, if the house property is let out, then this cap is not applicable. However, if the house property is self-occupied and treated as such, then there is a cap of rupees 2 lakh or 30,000 on interest on borrowed capital is applicable. Sometimes the cap is 2 lakh if these conditions are fulfilled. If these given conditions are fulfilled, then the upper cap for getting deduction in respect of interest on borrowed capital, that is capped up to rupees 2 lakh. If these conditions are not fulfilled, the conditions are mentioned on left side of your screen. If those conditions are not mentioned fulfilled, then upper cap for this interest on borrowed capital in case of self-occupied property treated as such is rupees 30,000. In any circumstances, for both house property, combined deduction under the section 24B, that is interest on borrowed capital, should not exceed 2 lakh. What are the conditions to get this higher amount of deduction in case of interest on borrowed capital when house property is self-occupied and treated as such? The loan has been taken on or after 1st April 1999. The loan has been utilized for construction or acquisition of the house property. The construction or acquisition should be complete within 5 years from the end of the financial year in which the capital was borrowed by you. And you possess a certificate issued by the lender in respect of the interest accrued during the year. If these conditions are fulfilled, then the highest slab, higher than the cap in respect of interest on borrowed capital is rupees 2 lakh. However, if these conditions are not fulfilled, then the cap is of 30,000 is applicable. Be careful. Be careful. House property, if it is let out, no cap. Cap is not applicable. If the house property is self-occupied, if the house property is self-occupied for two houses, any of two houses, and for remaining self-occupied property. For two houses, again, there are two things we are supposed to keep in our mind. If you are under old regime and you may be under new regime. If you are under new regime, then income from self-occupied would be treated as zero. Be careful. No deduction in respect of interest on borrowed capital is available. That is no 2 lakh, no 30,000. No deduction is available if you are under self-occupied. If the house property is self-occupied and you are under new tax regime. However, if you are under old tax regime, then interest on borrowed capital is available subject to cap of rupees 2 lakh. This cap is applicable for both the aggregate limit for both house property. Sometime it is 2 lakh, and if few conditions are not fulfilled, then 30,000 cap is applicable. For For remaining self-occupied property, it is considered as deemed to be let out. The rule which is applicable for let out house property would be applicable on you. Is it clear? Is it clear? Suppose suppose Tejaswini have three house property for his for her own residence, for her own occupation, self-occupied properties are there. This is located in Chennai. This one is located in Kolkata. This one is located in, say, Mumbai. The gross annual value, the gross annual value of this property is, say, rupees 5 lakh. This is 6 lakh. And this is 16 lakh. Interest on borrowed capital, if the loan has been taken on or after 1st April 1999 and the required conditions are fulfilled. Interest on borrowed capital is 50,000. Interest on borrowed capital is 1,50,000. Interest on borrowed capital is 2 lakh. Now, compute income from house property in hands of Miss Tejaswini. What should be considered as income from house property for Miss Tejaswini? Please compute. You have 5 minutes time to solve this one. Please compute. Now you have 4 minutes. Please compute. Yes, sir. Yes, ma'am. GAV for Mumbai house is 16 lakh. Anyone? Priya, you got the answer? Anyone? Kavita ji, Tejaswani? One answer I received, that is 9,20,000. Okay, let's check. Here, the gross annual value, we have three self-occupied property. Out of this, for property, we should consider as a self-occupied, and the remaining, the third property, should be considered as a deemed to be let out. Ideally, in this situation, since income, if we consider this Mumbai house as a deemed to be let out, then our income would be on greater side. So we should consider, definitely we should consider this house property as a self-occupied property. If we consider this as a self-occupied property, say, and this one is are treated as a deemed to be let out, then our calculation would be like this. For Chennai house, since it is considered as a deemed to be let out property, a gross annual value, it is 5 lakh. There is no municipal tax. So again, net annual value is 5 lakh less standard deduction, that is 30% of 5 lakh, which is 1,50,000, and interest on borrowed capital, that is 50,000. So altogether, my income from this property is 3 lakh, and from self-occupied property, the maximum, if I am under old tax regime, then my income from this house property would be negative 2 lakh. In any circumstances, interest in case of self-occupied property does not exceed 2 lakh. So max to max, 2 lakh would be reduced. So my income from house property is only 1 lakh. I have another option. Option 2. In this option, we should consider Kolkata house as a deemed to be let out. We should consider Chennai house as well as Mumbai house as a self-occupied property. If this is the case, our gross annual value for Kolkata house would be 6 lakh, no municipal tax. So net annual value is 6 lakh less 30% standard deduction, that is 1,80,000. Then interest on borrowed capital. There are no restrictions on interest on borrowed capital if the house property is treated as deemed to be let out or the house property is actually let out. So my income from Kolkata house is 6 lakh minus 1,80,000 minus 1,50,000, which comes to 2,70,000. Which came to 2,70,000. Now, income from self-occupied property would be 2 lakh plus 50,000, but there is an upper cap on interest on borrowed capital if I am under old tax regime. If I am under no new tax regime, then this 2 lakh is not available as deduction. In this case, my income from house property would be 70,000. That means if I am under old tax regime, considering option 1, my income would be calculated at rupees 1 lakh. Considering option number 2, that means considering Kolkata house as a self-occupied property, as a dim to be let out, my income would be 70,000. So in for the taxation purpose, where my income is on lower side, we should go with that option. That means we should consider Kolkata house as a dim to be let out and Chennai house as well as Mumbai house as a self-occupied property. So our income would be 70,000 if I am under old tax regime. If I am under new tax regime, then my income would be 2,70,000. Is it clear to all? Is it clear? Please stop it. Please stop it. Why you people consider Mumbai house as a dim to be let out? It is your choice which house property we should consider as a self-occupied and which house property we should consider as a dim to be let out. Out of these three self-occupied property, we should consider two, any of the two as self-occupied property. However, if it is anyone is a let out, then choice is not available. If all of them are self-occupied, then any of the two we should consider as a self-occupied. The remaining self-occupied property shall be treated as a dim to be let out, and accordingly, the solution would be like this. Is it clear to all? Is it clear to all? How could you calculate 9,20,000 as an income? I believe your solution would be like this. You have considered Mumbai house property as a uh, deemed to be let out. In that situation, that means this would be considered a 16 lakh. No municipal tax comes to 16 lakh. Again, 30% of 16 lakh is available as a standard deduction, that is 4,80,000. And 2 lakh is available as grant interest deduction is available for entire 2 lakh. So it is 9,20,000 is considered as income. And the deduction, if I am under old regime, then deduction for interest on borrowed capital in respect of self-occupied property is available to the extent of 2 lakh. So my income, if this is the case, then my income would be 7,20,000. If I am under old tax regime, my income would be considered as this. If I am under new tax regime, my income would be considered as this. So ideally, which should be considered as which is the better option? I believe option number 2 is better one, where my income is on lower side so that I'm supposed to pay lesser amount of tax to the government kitty. Done. If you have any confusion, then try to make this optional calculation for your decision. This should be considered. This is a decision process. Okay, done. Now it is clear to all. Anyone? Anyone? What options are available? How I consider these options? Is it clear to all? Why we should consider option number 2 as the best option? We will go with option number 2. Why? Because their income is on lower side. Ultimately, the lower income, that means lower amount of tax. My tax bill is on lower side. Do you think that payment of tax, if you pay higher amount of tax, you will be considered as level of satisfaction is on higher side? Money does not have this much of satisfaction. Agree or disagree? Are you satisfied if you pay a higher amount of tax to the government, or are you happy when you pay lesser amount of tax to the government on the same set of uh, uh, data? Obviously, lesser amount of tax. Everyone is required to pay lesser amount of tax. So there is some proper tax planning aspect is should be considered. I think it is clear to all. And old regime on new regime, the concept of old regime and new regime, is it clear? The only difference in old regime and new tax regime under the head house property is that in case if you are under new regime, deduction up to rupees 2 lakh in respect of self-occupied property. That is interest on borrowed capital. No deduction is available in respect of interest on borrowed capital. However, if you are under old tax regime, then the benefit of interest on borrowed capital is available in case the property is self-occupied and treated as such. Up to maximum limit is 2 lakh subject to certain conditions. Now it is clear to all how to compute income from house property. Done. Copied. Shall I remove it? Everything is copied. Shall I erase? Okay. Now we are looking for our third head of income called profit and gains of business or profession. Profit and gains of business or profession. This one is the third head of income we are going to discuss. What do you mean by business? Anyone? What do you mean by business? Priya, Kavita ji, what do you mean by business? Okay, no answer. Okay, I'm explaining. Business includes any trade, commerce, or manufacture. Business includes any trade, commerce, or manufacture. That means trading. What do you mean by trading? That means buying goods in one market and selling the same into another market. I believe it is known as trading. If you are doing trading of any goods, then it is considered as you are doing business. Agree or disagree? If you are manufacturing certain goods, what do you mean by manufacturing? That means you bought raw material. After doing some process, the raw material is changed into some other product that is known as manufacturing, and then you are selling those goods to in the market. This is termed as manufacturing. If you are doing trading, if you are manufacturing, still then we should consider you are doing a business. Agree or disagree? The third one is commerce. What do you mean by commerce? Trade, commerce, or manufacture. Business includes trade, commerce, or manufacture. Trade, we know what is the meaning of trade. What is trade? Manufacturing, we understand what is manufacturing. Third villain is commerce. What do you mean by commerce? Anyone? Anyone? Okay. Think about the situation. Suppose suppose Tejashwini is buying material A, material B from Priya. She processed these two material and got product C. Okay. Product C is sold by her to Kavita. Tejaswini is located in Mumbai. Priya is located in Delhi. Kavita is located in Chennai. First of all, Priya of Delhi sold material to Tejaswini in that form. She is doing trading business. Whatever income she will generate shall be taxable under the head PGBP. Tejaswini is processing those material to get some other product. That means she is manufacturing certain item. She is also whatever profit she will earn shall be taxable under the head PGBP. Now the goods are sold to Kavita located in Chennai. Tejaswini is located in Mumbai. Now these goods are transported. Tejaswini delivered these goods to transporter. The name of transporter is Siddha. With the help of transporter, goods are delivered from Mumbai to Chennai in the office of Kavita. I believe Kavita is also doing trading, but what about transportation work done by Siddha? Do you think Siddha is doing trading business? Siddha is doing manufacturing business, but they are providing certain services to the business house. Agree or disagree? Agree or disagree? They are providing the Siddha, the transporter is providing certain services to the business. Do you think Siddha is providing professional services to the trader? Agree, yes or no? Is it transportation of any goods? Do you think it is a professional service? So it is not considered as a profession. So what that Mr. Siddha is providing, whether he or she is doing business or providing services or providing engaged in any profession. Siddha is not doing any trading. Siddha is not engaged in manufacturing. She is engaged in commerce. That means add to trade. She is helping in executing or in the process of trading or manufacturing. That is known as commerce. If you are running a trading business, if you are manufacturing any article, or if you are in a commerce, that means add to trade, all are considered as your business income. That means income derived, income earned by Tejashwini, Priya, Kavita, and Siddha. All are considered as your business income. Is it clear? Is it clear? One more interesting line was introduced here. Business includes trade, commerce, or manufacture, or any adventure in the nature of trade, commerce, or manufacture. What do you mean by adventure? Anyone? What do you mean by adventure? Anyone? What do you mean by adventure? In during this Diwali festival, I'm visiting to Manali. There I did some skydiving or some paragliding, etc. That is adventure. Can I say that I am doing business Business includes any adventure. Can I say that I did some business in Manali? I did paragliding. That is adventure in my life. That is my lifetime experience. Can I say that I did a business? The answer is no. The answer is no. The answer is no. Then what do you mean by any adventure? Any adventure in the nature of trade, commerce, or manufacture is termed as a business. Which type of adventure is considered as a business? The adventure which is in the nature of trade, commerce, or manufacture shall be considered as a business. For example, do you think any adventurous activity shall be considered, even though it is in the nature of trade, commerce, or manufacture, shall be considered as a business? In general, we know that business means the transaction where recurring transactions are happening. Yes or no? One single isolated transaction of trading, do you think it is considered as a business? I have only single isolated transaction during the entire previous year. Suppose I am engaged in the business of cloth. Suppose I am engaged in the business of cloth. I am buying cloth and selling cloth. This is frequent in nature. Frequently, I am buying and selling cloth. Then I am saying that I am engaged in the business of cloth. Agree or disagree? During the entire previous year, only one transaction, I bought toys and sold these toys in the market. Can I say I did any business? Can I say I did any business of toys during the previous year? Only single transaction, one buy and one sale. I made only one transaction of buying and selling of toys during the previous year. Can I say that I done business of clothes during the previous year? Can I say that I also did business of toys during the previous year? Ideally, we know that business means regular transaction. Frequency is on higher side. However, income tax guide us that any adventure in the nature of trade, commerce, or manufacturing is also considered as business, even though that means for selling toys, for the business of toy, I did some adventurous activity during the previous year, which is in the nature of trade. Yes, it is trade. I bought this one from another one market and sold in another market. That is the activity of trading. Even though it is a single transaction made by me during the year relating to toys, still I done business. In accounting, we know that business means frequency of transaction, recurring nature of transaction should be there. But income tax suggests that any adventure which is in the nature of trade, commerce, or manufacture, adventure, that means the transaction, the activity which we are supposed to do once in blue moon, that is known as adventure. Agree or disagree? That the grammatical meaning of adventure is like that. Adventure, that we know that adventure. What do you mean by adventure? The word adventure means the activity which we are supposed not doing on regular basis. We are supposed to do that activity on once in blue moon. That is known as adventure. During the entire year, I done single isolated transaction of toys, one buy and one sell. Even though regularity is not there, even though frequency is not there, but this adventure itself is the nature of trade, commerce, or manufacture. This single isolated transaction is also considered as a business. Is it clear? Done. That means business includes trade, commerce, or manufacture, or any adventure or concern in the nature of trade, commerce, or manufacture. The definition part is okay to all. The definition is okay. Now come to profession. What do you mean by profession? What do you mean by profession? Anyone? What do you mean by profession? You are a cost accountant. You are a cost accountant. You are practicing as a cost accountant. That means you are getting some degree by some study and have thorough knowledge of that subject. and you are executing that part, executing that expertization for your occupation. That is known as profession. Agree or disagree? I am a chartered accountant. I am practicing that thing. Hence, I should be considered as a professional chartered accountant. You are a doctor. You are practicing that self. You own a chamber. You look after a patient, etc. You may termed as a professional person. You may be termed as a professional doctor. Yes or no? That means we can say that. Can I say that professional are those person who got some certification, some degree by doing some study, and that expert knowledge they are applying for their occupation. Those people are known as professional. Agree or disagree? Or something else is also considered? Someone else are also considered or not? Please reply quickly. Anyone? Only those person who have some degree, some knowledge, some degree which they got through their patient's study, and then they applying that expert knowledge for earning their occupation. That is, those fellow are considered as professionals. Yes or no? Please reply quickly. Kavita, Tejashwani, Siddha, Mohana, please reply quickly. Only one answer I got. That is yes, sir. Do you think the
Yes,
meaning
sir.
of professional that do you think meaning of professional limited to that portion? That means you should have a degree. Have you ever heard about the name of Kishore Kumar? Have you heard about the name of Dilip Kumar, the famous actor? Kishore Kumar is one of the greatest singer. They did not possess any degree. They did not possess any degree. Can't we call them a professional singer or professional actor? That means it is not like that. Professional, that does not means you should have a degree and you are practicing that knowledge. No. In some profession, degree is required. You can't become a doctor without possessing any degree. You can't work as a cost accountant without possessing any degree of cost accountant. But you may act without possessing any degree. We cannot term you as a professional actor. We cannot term you as a professional singer. Yes, there are some God-given talent are there. There are God-given talent are there. That means profession includes vocation. Profession includes vocation. Professional, the word profession includes vocation. That means sometime degree is required, sometimes no degree is required. And if you are using your specialized knowledge, God-given talent for earning your occupation, for earning your livelihood, you are considered as professional. Agree or disagree? Agree or disagree? One more thing. I'm also a singer. I'm a good singer in bathroom. Can I say that I am a professional singer? Since my talent are not linked with my livelihood, I cannot term myself as a professional singer. If I have a talent and due to that talent, even though I do not possess a singing degree, and that talent is linked with my livelihood, surely I will be considered as a professional person. Agree? Understand? What is termed as a business, what is termed as a profession? I believe now it is clear to all. That means a bathroom singer, that is my hobby. That is not my profession. Okay, clear? Whatever income you earned by doing your professional activity or by doing business activity, that would be taxable under the head PGBP. That would be taxable under the head PGBP. It may be Reliance Industries, income generated by Reliance Industries by doing business activity. It should be taxable under the head PGBP. Income of a small trader shall also be taxable under the head PGBP. For the purpose of calculating business income, certain deductions are supposed to be allowed. For example, suppose Tejaswini is engaged in a business. Tejaswini is engaged in the business. During the entire year, her sale is of rupees, say, 70 lakh. During the year, she purchased, the purchase is at 50 lakh. This is the first year of her business. Her closing stock are at nil. Can I say that her earning is 20 lakh from business? Agree or disagree? Can I say that her earning from business is 20 lakh for the year? Agree or disagree? However, 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 during the year, for executing this sales transaction, she has taken a shop. For this, she is paying rent of rupees 2 lakh. She employed 2 person for delivering, etc., for delivery these goods to the customer, delivery boy, for a monthly salary of rupees say 10,000 each. So during the year, she incurred salary expenditure of 2,50,000. During the year, she also bought certain furnitures, etc., worth rupees 5 lakh. On this furniture, depreciation of rupees say 50,000 is available. Can I say her income is 20 lakh or something lower than 20 lakh? We should also consider these expenditure for calculating the business income of Tejaswini. Agree or disagree? Agree or disagree? Shall we consider income of Tejaswini at rupees 20 lakh or something else we are required to be calculate which is lower than 20 lakh? Agree or disagree? The expenditure which she incurred for earning that income should also be available as deductions. That means her income should not, her business income should not be to a sales minus purchase expenditure, but something more. If she incurred any expenditure to earn that income which is not purchased, should also be reduced from the income net difference of sales and purchase. Here, her income would be considered at 20 lakh, that is the gross profit, less rent, less salary, 2.5, less furniture. Whether 5 lakh entire amount would be available as a minus or 50,000 would be considered as a minus. What is your take? What is your take? Kavita, what should be reduced? Whether the entire value of furniture bought during the year should be reduced from my business income, or while computing my business income, the depreciation amount should be reduced on those furniture. What is your take? I believe depreciation should be reduced. So the business income of Tejaswani is 15 lakh, and accordingly she is liable to pay tax on rupees 15 lakh. Now the question arises, which type of expenditures are available as deductions while computing business income? In general, the theory is that any expenditure incurred by any revenue expenditure incurred by the SSE for earning that business income shall be reduced while computing business income. Agree? Anyone? Any doubt till now? Anyone have any doubt, any query till now? Anyone have any doubt, any query? Okay, now the rules. Expenditures are allowed as deduction. There are two type of expenditure: revenue and capital. Expenditure may be of capital in nature, may be of revenue in nature. All revenue expenditure incurred by the businessman to generate business income shall be allowed unless and until specifically disallowed. On the other hand, if expenditure incurred by you are in capital in nature, shall be disallowed. That means we should not consider as a deduction any capital expenditure. We should not consider as a deduction unless and until specifically allowed. Please copy this. Please copy this. All business expenditures are required to be divided into two parts: revenue expenditure and capital expenditure. Revenue expenditure should be allowed while computing your business income. The deduction should be taken, should be reduced from your income unless and until specifically disallowed. What do you mean by unless and until specifically disallowed? If your income tax law made a specific provision to disallow certain type of revenue expenditure, then only we should disallow that one. Else, ideally, we should consider all revenue expenditure as an allowed expenditure. We should reduce those expenditures while computing my business income. On the contrary, all capital expenditure, whatever the capital expenditure incurred by me for earning that business income, shall be considered as a disallowed. We should not get any deduction in respect of capital expenditure unless and until if your income tax law, by making a special section, by specific section, made the provision to allow, then only we should allow capital expenditure. Otherwise, ideally, if no special sections are made in respect of allowance of a capital expenditure, our presumption that will be that capital expenditure should not be allowed. On the contrary, in case of revenue expenditure, if that revenue expenditure is incurred for earning business income, our presumption is that this revenue expenditure should be allowed from my business income. However, if income tax law made a specific provision in the statute book to consider, to suggesting, to advise that this type of revenue expenditure shall not be allowed, then only we should disallow those revenue expenditure. Otherwise, we will consider the whole revenue expenditure while computing our business income. Is it clear to all? Please copy it. Please copy it. Done? Done? Now think about the situation. A businessman has incurred advertisement expenditure. A businessman has incurred an advertisement expenditure in certain TV channels. Ad will be appear. Can I say that this advertisement expenditure is revenue in nature? Yes or no? Now, in general, since it is a revenue in nature, entire advertisement expenditure incurred by them shall be allowed. However, as per income tax law, a specific provision has been made regarding advertisement expenditure In any political program, if you incur any advertisement expenditure in a political leaflet, in a political brochures, etc., should not be allowed. Of any party, if you provided an advertisement in a brochures or leaflet of a political party, that advertisement expenditure should not be allowed. That means special provision has been made in respect of advertisement expenditure made through leaflet, etc., published by the political party. That should not be allowed. Suppose this SSE, this businessman has incurred advertisement expenditure of rupees 5 lakh. Out of this, 1 lakh has been incurred in political parties leaflet, and remaining 4 lakh is incurred on some other channel, some other like printing in newspaper or some advertisement in TV channel, etc. In this situation, this would be allowed. This should not be allowed. Even though this is also a revenue expenditure, but a special provision has been made regarding this type of expenditure. A special provision suggests that this type of expenditure should not be allowed. Hence, this, even though it is revenue in nature, should not be allowed while computing business income of the businessman. Is it clear? Now, there is a list which expenditure we should consider or which expenditure should not be considered. This list is not exhaustive, but in general, rent, rates, tax, repairs, and insurance for business or professional premises should be allowed as a deduction. Current repair and insurance of machinery, plant, or furniture is allowed as a deduction. Be careful. Current. If it is a capital repair, that means something is new is come into picture. Then that is not considered as a current repair, and you are not consider that deduction is not allowable. Depreciation on building, machinery, plant, or furniture. How to calculate depreciation? We will learn afterwards. Revenue expenditure on scientific research. One more provision has been made regarding capital expenditure incurred on scientific research if related to business except land. Some special provision has been made regarding capital expenditure incurred by you on scientific research relating to your business. Hence, since special provisions guide us that it should be allowed, hence this capital expenditure should be allowed. Preliminary expenditure in relation to formation of a company should be allowed as a deduction. Insurance expenses. If these insurance are not related to the businessman life or businessman health, then it should be allowed. Insurance expenses for your stock, for your stores, for your office premises, for your godown, for on health of your employee should be considered as a allowed deduction. However, if insurance premium you paid for your own life or life of your near and dear one, that is from your family member, that should not be considered. Any health insurance premium paid by you for health of your own health or your family member should not be allowed. However, if it is for your insurance premium you paid for your stock, stores, cattle, health of employee, that should be considered as an allowed deduction. Bonus or commission to employees. If you paid any bonus or commissions to your employees, since it is relating to your business, hence it should be allowed. Interest on borrowed capital should be allowed. Contribution towards approved provident fund, superannuation fund, and gratuity fund should be allowed on payment basis. Bad debt in respect of income considered in previous year shall be allowed as a deduction. Advertisement expenditure we already discussed. Any other expenditure which is not of capital nature or personal expenses of the SSE is allowed if it is expended wholly and exclusively for the purpose of business or profession carried on by you. However, any expenditure incurred by you which is prohibited by law or which is in offense or in violation of any law should not be allowed. For example, some penalty has been imposed by some department for violating any law. That penalty should not be allowed you as a deduction. CSR expenditure, that means corporate social responsibility. If any expenses is incurred by a company for doing CSR activity, shall not be considered as a deduction. shall not be allowed as a deduction. Even though the expenditure is revenue in nature, still if any expenditure incurred by a company for providing CSR activity in CSR activity should not be allowed as a deduction. In general, that means penalty for violation of any law or any expenditure which is prohibited by any law should not be allowed as deduction. Any expenditure on CSR activity should not be allowed as a deduction. Even though it is capital nature or revenue nature, hardly matter, should not be available as a deduction to you. Is it clear to all? Is it clear to all till now? Is it clear to all till now? Any question till now? Mohan, Mohana, Priya, Kavita, Siddha, anyone have any question, any query?
No, sir.
Great. Now, depreciation. What do you mean by depreciation? Any thought process on depreciation? What do you mean by depreciation? I believe you know a little bit of accounting. So all of us know how to calculate depreciation. And what is depreciation? Everyone knows about that one, or it is a new concept for you? Kavita? Priya? Depreciation? What is depreciation? Please try to make it interactive. Kavita? You don't know depreciation? Depreciation means the diminution in the value of the asset on account of wear and tear and obsolescence. Here, in the eye of income tax law, what we understand depreciation is an amortization of expenditure, amortization of capital expenditure. But the mechanism to calculate depreciation is different than your accounting way of calculating depreciation. In accountancy, we learned that suppose during the previous year, Mr. X bought on 1st July 2023 a furniture of rupees 1 lakh for office use. On 31st March 2023, we are supposed to calculate depreciation. 24, we are supposed to calculate depreciation on it. How could I calculate depreciation? Anyone guide me? What should be the amount of depreciation on this? If the rate of depreciation is 10%. If the rate of depreciation is 10%, what should be the amount of depreciation in this case? Anyone? Anyone? Kavita, Siddha, is 1,000. Why 1,000? Furniture worth rupees 1 lakh. Rate of depreciation is 10%. How could you calculate it 1,000 only? Please recalculate. In general, in
10,000,
accounting,
sir.
10,000. How could you calculate 10,000? It is for your accounting. Siddha, it is as per accounting norms, you are supposed to calculate depreciation at rupees 10,000.
10%,
In accounts, what we will do, depreciation, we will compute depreciation in this way. 1 lakh into 10% into for 9 months divided by 12. Yes or no?
Yes, sir.
Yes or no? In accounts, we will calculate depreciation in this way, 7,500. Since the the furniture was not used throughout the year, hence the pro rata depreciation would be available to us. Agree or disagree? Agree or disagree? Mohana, in accountancy, we should calculate depreciation in this way. But, dear student, whatever you learned in accountancy for the calculating depreciation, please forget. That mechanism is not available in income tax. In income tax, we will provide a simple way of calculating depreciation. How it is, I am guiding you. One of the simplest way of calculating depreciation is provided in the income tax law. In income tax, we are not providing depreciation on individual assets. In income tax, we are not providing depreciation on individual assets. Rather, we calculate depreciation on block of assets. On block of assets. What do we mean by block of assets? Block of asset is only word tricky. Block of asset. In other words, in common parlance, we can term this as a group of assets. Don't use the word group of assets while solving your illustration. Use the word block of assets. The technical term is block of assets, but for understanding, we are supposed to categorize our assets into various groups. Say I have building A, I have building B, I have furniture X, I have plant and machinery A, plant and machinery B, plant and machinery C. The rate of depreciation for each asset, as for example, for this, it is 5%. For this, it is 10%. For this, it is 10%. For this, it is 15%. For this, it is 15%. For this, it is, say, 30%. In this situation, we are required to classify or categorize our asset into various group on the basis of two condition. On the basis of two condition. Number one, nature of asset and rate of depreciation. If both are same, that should be classified under different category, different group. And on these basis, that means on the basis of nature of assets and rate of depreciation, we should classify our assets. We should categorize our assets in number of groups. How many groups will be formed on these type of assets from this in this illustration? Any idea, any suggestion? How many groups we can form with given information, with given number of assets? How to frame group or block of assets on the basis of nature of assets and rate of depreciation? Can I say I have block 1? I have a block 1 called building A. The word group is replaced by block. Be careful. We will not use the word group of assets. We will use the word block of assets. Okay. This one is considered as one block. This one is considered as another block. Why it is another? Even though it is a building, but rate of depreciation is different. So it should not fall into the same group called building. Since here building, the nature of the asset is building, rate of depreciation is 5%. Here the nature of asset is building, but rate of depreciation is 10%. Both should be the same. Nature of assets as well as rate of depreciation should be the same to categorize that asset into the same block. Hence, here we should consider these assets as a two different block. Furniture X 10%. Since here 10% are the rate are the common, but nature of asset is different. So it will be our third block. Here, plant and machinery 15%, plant and machinery 15%. These two assets will be classified as a block number 4 because nature of asset and rate of depreciation both are same. Hence, this would be considered, this both of these assets will fall into the same group of assets, same block of assets. Hence, this would be considered as our fourth block. And similarly, this one is considered as a fifth block. Why fifth? Even though nature of asset is same, but rate of depreciation is different. Nature is the plant and machinery, but rate of depreciation is different. Hence, altogether, in this given set of data, we have 5 blocks of asset. Agree or disagree? Is it clear? Please copy it. Is it clear to all?
Yes, sir.
How to map block of assets? How to classify assets into various blocks on the basis of nature of asset and the rate of depreciation, where both are same. That type of asset, those assets should be classified under the same block of asset. Done? Clear? Shall I remove it? We have asset of two types: tangible and intangible, on which we will provide depreciation. Tangible, that is building, it may be building, it may be furniture, and last is plant and machinery. Intangible, like patent, know-how, etc. That means any intellectual rights other than goodwill. Other than goodwill. Provided these assets are acquired on or after 1st April 1998. Okay. These are the nature of the assets suggested by income tax law, and on those, rate of depreciation as provided by the income tax law are like this. This is not exhaustive table. Selected regular item, I have provided this rate of trade chart. Building, if the nature of asset is building, and if that building is a residential building other than hotel and boarding, then as per income tax law, rate of depreciation would be 5%. If you have a building for business purpose and that is a non-residential building like your offices, godown, factories, etc., including hotel and boarding, the rate of depreciation we are supposed to charge, it is 10%. Building like temporary construction, we should consider rate of depreciation 40%. Furniture, we should consider 10% as the rate of depreciation. Plant and machinery, ocean going ship, vessel and speedboat, we will provide depreciation at the rate of 20%. Plant and machinery like motor car, including lorries and buses used for hiring business, for example, taxi, etc., we should charge depreciation as 30%. If the motor car is not used in hiring purpose, then rate of depreciation would be 15%. Then rate of depreciation would be 15%. If the motor car is not used in hiring purpose, not used for hiring purpose, that means it is not used as a taxi, Uber, etc., then rate of depreciation on those type of motor car used in business or profession shall be calculated at the rate of 15%. Plant and machinery like computer, including computer software, etc., the rate of depreciation would be considered at 40%. On plant and machinery like books owned by professional should be charged at the depreciation of 40%. Books are also treated as a plant. It's not books like periodical and journal. It is like few boats which are used for lifetime of the professional person. This type of boats, the in case if you visit a home or office of an advocate, you will saw various boats are in the cabinets. Those, and we are talking about those boats. Boots owned by a professional are subject to charge at the rate of 40%. However, boots like uh, India Today, etc., these are periodical and journal. 100% these expenditure are considered as a revenue nature, and 100% deduction is available in respect of those books. We are not talking about those books. Plant and machinery like air or water pollution control equipment, the rate of depreciation would be 40%. On oil well, it is 15%. Intangible assets, which other than goodwill, not goodwill, other than goodwill, if those intangible assets acquired on or after 1st April 1998, rate of depreciation would be 25%. Please try to learn those rates. Is it clear? What would be the rate of depreciation on a building used for office? Anyone? What would be the rate of
10%.
depreciation? 10%. What would be the rate of depreciation on plant and machinery which is installed in my office premises? That is 15%. In general, it is on plant and machinery, we would calculate depreciation at the rate of 15%. However, if I am using a motor car for hiring purpose, even though that motor car is also plant and machinery, since the uses is hiring purpose, then the rate of depreciation on those type of motor car would be 30%. What would be the rate of depreciation on computer or laptop used in my providing this professional activity? It is 40%. Clear? You are supposed to remember this rate structure. Clear? Now we know that nature of assets in income tax, in asset, that is tangible or intangible, and what will be the rate of depreciation provided by the income tax law. On the basis of this rate of depreciation and nature of assets, we are supposed to form various block of assets. On block of assets, we are supposed to provide a depreciation. Be careful, in accountancy, we are charging depreciation on asset basis. That means on each asset, we are supposed to calculate depreciation separately. However, in income tax law, we are not supposed to calculate depreciation on individual assets. We are supposed to calculate as depreciation on the block of asset. That means on entire group of assets, we are supposed to calculate depreciation. How it should be calculated? This is the table we are supposed to consider. We will provide information in this table. The result will be our calculation. The WDV of the block at the beginning of the previous year. Be careful. This is what do you mean by WDV? That is written down value of the block, not of individual asset. It is the written down value of the block of the asset at the beginning of the previous year. It may be any block, say plant and machinery 15%. It may be of furniture 10% or any other. That means, first of all, we are supposed to get WDV, written down value of the block, not of individual asset. WDV of the block at the beginning of the previous year. For example, I have two type of furniture, X and Y. Furniture X and Y, both are depreciable at the rate of 10%. So return on value of these combined assets at the beginning of the year is say 100. I have X and Y in the block. During the year, I bought furniture Z on 1st July 2023. On this furniture Z, again, rate of depreciation is 10% for rupees, say 50. So that whatever amount of addition, whatever the value of that furniture Z, which was acquired during the year, should be added in this value. So I got 150. Now, if any asset sold by me during the previous year, or which falls into this block, say during the previous year, I sold furniture X. Furniture X was sold by me in the month of December 23, say for 30. The entire sale proceed we are supposed to reduce to get this 120, to get this XYZ. Be careful. Entire sale proceed we are supposed to reduce from 150 to get 120. It is in accountancy, we are not supposed to calculate depreciation in this way. Be careful, don't merge the accounting way of calculating depreciation with income tax way of calculating depreciation. If you merge these two techniques, then surely it is a new, you will got something else, some other figures or some other things. Try to separate these two technique of calculating depreciation. Don't merge. Okay. Now check whether this 120, that means the value in place of XYZ is positive or negative. If it is positive, if this value is positive, then calculate a depreciation on it. 120 at the rate, since furniture block is 8, rate of depreciation is 10%. Our depreciation at the rate of 10% would be 12, and next year our return on value would be 108. In this illustration, if you notice that we did not consider the date of acquisition, that is 1st July 2023. Unlike accountancy, we did not provide depreciation for 9 months. We consider entire value and we charge depreciation. We did not consider how many days it was used, etc. Again, number two exception, number two, please note that sale proceed has been reduced. Sale proceed has been reduced from the block of assets, and further we pro rata approach we did not follow. That means on this asset we should charge depreciation from April to December. We did not done this one. We reduce entire value of sale proceed. Then whatever value we got, on that value we calculated our depreciation. If value in place of XYZ is positive. If the value in place of XYZ is negative or some in some other situation, we are not supposed to calculate depreciation. Is it clear till now? Is it clear till now?
Yes, sir.
Will you merge your accounting way of calculating depreciation with income tax way of calculating depreciation? Please don't merge. Accounting way of calculating depreciation is bit different than income tax way of calculating depreciation is different. If you try to merge all these things, then haphazard result will be there. Just follow this table. What is the table? First of all, this is simple illustration. What will be the if and buts? We will discuss in next class. In general, we are supposed to classify our assets into blocks depending on the nature of assets and rate of depreciation. After framing the block of assets, in this table, we should provide data. Opening return down value of the block at the beginning of the previous year. We should add any assets which fall into the same block which was acquired during the previous year. The entire value should be added. Then we should reduce sale proceed of the asset, which was any assets which is under this block. If that asset is sold during the year by us, the entire sale proceed of that asset should be reduced from this ABC figure. And then we got XYZ. If it is positive, then we should charge depreciation on it. That's all. Not like accountancy, we are supposed to calculate assets wise depreciation. We are supposed to calculate pro rata depreciation. We are supposed to consider profit on sale of asset, etc., etc. That is not required to be done in income tax law. Is it clear? Please copy this table in your notebook. This format, please copy this format in your notebook. Any question, any query till now? The remaining part of depreciation, we will discuss in our next session, next class. If you have any question, any query, we have 3 minutes left. If you have any question, any query, please ask, please raise. Anyone have any question, any query? Please ask. We have couple of minutes to resolve your question, your query from today's session or any session or any earlier sessions. And please copy that this format. No question, no query.
No, sir.
So shall I conclude the session?
Yes.
If you enjoyed the session and learned something, then please post your chat in the chat box. Please post your comment in the chat box. Tomorrow we will meet again at 6 o'clock. Please post your comment on the chat box, in the chat box. Thank you. Good night.